Alright, let's get into it. You hear these acronyms all the time, right? IMF, FBR, PTA. Can we get some subtitles for real life, please? Well, today we're adding another one to the list, Ipsas. It stands for International Public Sector Accounting Standards. I know, sounds boring, but stick with me. This is actually a huge deal. Think of it like this. You wouldn't trust a company that scribbles profits on a napkin. You want rules. A universal language of money so you know they're not just making stuff up. That's what Ipsas is, but for governments. Now, why does this matter for a country like Pakistan? Building dams, running railways, funding hospitals, operating a massive defense network. All of that costs money. Your money? Taxpayer money. So how do you know where it's going? Is the money for education actually building schools, or is it getting lost in a bureaucratic maze? Ipsas provides the framework to answer these questions. It forces governments to be honest, making it harder to hide debt or misreport assets. Adopting Ipsas sends a signal to the world. We're serious about financial discipline and transparency. Investors, lenders like the World Bank or IMF and other nations take notice. This credibility is like gold, leading to better loan terms, more investment, stronger economic footing. It's the difference between showing up in a tailored suit versus sweatpants. Ultimately, it's about accountability. For decades, government accounting was a black box. Ipsas prized that box open. We said Ipsas is the rulebook for government money. It's a big rulebook. Today we focus on one important rule. Ipsas 18, segment reporting. Think of the government's total financial report as a giant blurry group photo. You can see the big picture, but you can't make out details. Who's doing what, who's spending what? Ipsas 18 is the tool that lets you zoom in. It says, you can't give one giant revenue number and one giant expense number. Break it down. A segment is a distinguishable component engaged in providing services or products with its own financial info. It could be health, education, or a geographic area, the province of Punjab or the city of Karachi. The whole point, provide a more detailed financial picture to analyze each part separately. It's like taking individual selfies of each department instead of one blurry group shot. Traditionally, everything went into one giant pot, the consolidated fund. You couldn't tell if something like the National Railway was a black hole or not. Ipsas 18 requires reporting segment revenue, expenses, carrying amount of assets, and total liabilities, so you can see which parts are self-sufficient, subsidized, or draining resources. It's financial forensics for the public sector, crucial for policymakers. Ipsas 18 changes how governments report. More detail, more clarity. It brings corporate-level clarity to public finance, turning murky water into a clean dashboard. And that clarity is a game-changer. Next, how to break down government spending step by step. Okay, so how does this actually work? How do you go from one messy consolidated statement to neat segments? Ipsas 18 gives a step-by-step process. First, identify reportable segments. A segment is a distinguishable component that provides services or products and has its own financial information. It must be material enough, judged by revenue, expenses, or assets relative to the whole. For Pakistan, one segment could be health, education, infrastructure, defense. Next, attribution. Allocate revenues, expenses, assets, and liabilities to each segment. Some things are clear. Teacher salaries go to education. The cost of building a motorway goes to infrastructure. But shared resources, like a central admin building, are tricky. Ipsas 18 requires a reasonable basis for allocating shared costs. Example. Allocate maintenance by square footage used, or allocate IT costs by number of employees per segment. The goal? Create accurate financial reports for each segment. Infographics show costs flowing to department icons, reflecting true resource consumption. Finally, present this information in the financial statements, not buried footnotes but formal disclosure. For each segment, disclose segment revenue, internal versus external, expenses, carrying amount of assets, and total liabilities. Citizens, journalists, analysts, and international lenders can all perform meaningful analysis. It's a detailed report card, not just a final grade. Next, how segment reporting plays out in Pakistan with real examples. So let's bring this home. How would Ipsas 18 look in Pakistan's public sector? Picture auditors, public sector offices, government signage. Take Pakistan Railways. Today it might show a single huge loss on the books. It becomes a political football. Privatize it, bail it out. But railways is multiple businesses. Passenger service, often loss-making. Freight service, which might be profitable. Real estate holdings and workshops add more dimensions. Ipsas 18 would force separate reporting for each segment. You might discover the freight division is profitable. Passenger service might be a social service, not a profit venture. Segment reporting lets policymakers see how much the passenger service costs. It enables informed public debate rather than headline slogans. Another example, the government of Sindh. It could report by service, health, education, law and order, showing spending on hospitals versus schools versus policing, or by geography, Karachi, Hyderabad, Sukur, revealing regional disparities. Imagine a citizen logging on and seeing the Public Works Department's clear report. You could see revenue from fees, salaries, and spending on new projects, and what assets exist. This makes government spending tangible and local, empowering citizens to hold local officials accountable. Next, why implementation is hard, and what obstacles Pakistan faces. If segment reporting is so great, why isn't it everywhere overnight? Because it's hard. It's a massive uphill effort. First, capacity. You need trained accountants across every department, federal and district. It's a fundamental overhaul. Old ledgers to modern accounting software. Second, data and systems. Departments operate in silos. Their systems don't talk to each other. Getting clean, reliable data is already tough. Imagine allocating shared costs of the Prime Minister's Secretariat across non-integrated systems. Broken links make it a logistical nightmare. You need a centralized FMIS, a digital backbone that captures transactional detail. Implementing it is massive, expensive, and time-consuming. Then there's political and bureaucratic resistance. Transparency can be threatening. For years, unclear accounts gave cover for inefficiency, mismanagement, and sometimes corruption. Government complexity itself is a problem. Identifying segments isn't straightforward. What about entities with both commercial and social objectives? Allocating costs can spark intense debate and potential manipulation. Getting definitions and methodologies right needs careful thought and expert guidance. You also need strong independent oversight and a sustained reform checklist. These foundational challenges must be tackled systematically. Implementation is tough, but knowing the obstacles is the first step. Next, why the payoff is worth it. With all those challenges, is it really worth it? Yes, the benefits are transformative. Big payoff number 1, transparency. When info is broken down, it becomes understandable to many more people. Ordinary citizens, journalists, NGOs can ask intelligent questions. This is the bedrock of healthy democracy and stronger accountability. When a department must publish segmented reports, its performance is public. You can see maintenance spend versus new construction and year-to-year asset changes. If performance is poor or irregularities appear, it's harder for officials to hide behind complexity. Citizens, parliament, managers and ministers can hold specific people accountable. Beyond accountability, segment reporting improves decision-making. You can allocate scarce resources strategically rather than flying blind. Internationally, credibility matters to the IMF, World Bank, and foreign investors. Adoption builds confidence, lower borrowing costs, and better loan terms. In the long run, transparency can stabilize the economy and benefit citizens. Short-term hassle, long-term payoff, city transformation over time. Transparency breeds credibility, efficiency, accountability, attracting investment and building resilience. That builds trust at home and abroad and benefits every citizen, so it's worth the investment. Next, the practical next steps Pakistan must take to implement Ipsas 18 effectively. Pakistan is on this journey. How does it get to the finish line? Concrete steps: leadership, training, technology, pilots, independent audit. First, sustain top-level commitment from the Ministry of Finance and the Prime Minister's office. This is national governance reform, not just an accountant's project. Set a clear phased roadmap with realistic timelines and dedicated resources. Communicate expectations clearly to all departments. Second, a massive investment in human capital, nationwide training and CPD. Partner with ICAP, ICMAP, and universities to deliver Ipsas modules. Third, accelerate implementation of a unified FMIS, the digital backbone for IPSAS adoption. It must capture transactional detail and facilitate complex allocations for segment reporting. Finally, adopt a pilot and scale approach instead of a big bang rollout. Start with Pakistan Railways, PIA, or the Ministry of Health to test methodologies and systems. Use pilots to identify issues, document lessons, and refine best practices. Then expand rollout gradually with refined implementation plans. Investing in technology automates manual processes and reduces error. Real-time dashboards provide strategic advantage to decision-makers. All this requires political will, strong oversight, and sustained funding. A pragmatic step-by-step strategy beats chaotic Big Bang approaches. With leadership, training, FMIS pilots, and oversight, Pakistan can adopt Ipsas 18 and transform public finance. Small steps, sustained effort. Let's wrap this up. We started with the scary acronym Ipsas. Now see it as a rulebook for transparency. At the heart is Ipsas 18, segment reporting. It splits the monolithic blob into digestible pieces. It stops mixing apples and oranges, for example, defense versus public health. Identify key parts, health, education, state-owned enterprises, and give each a financial report card. That enables a smarter, nuanced conversation about spending. Instead of arguing total deficit, analyze each segment's performance. See what's working, what's not, and where tax rupees are going. It pinpoints responsibility. Managers and ministers can be held accountable. Beyond accountability, it improves policymaking and resource allocation. The path has potholes, training, technology, bureaucratic resistance, requiring long-term political commitment. But the payoff, credibility, better loan terms, investment, and a stronger economy, benefiting all citizens. It's a tough climb, but the view from the top is worth it. Ipsas 18 is more than an accounting standard. It's a philosophy of transparent government finance. It commits that government finances are not a state secret. Citizens get the lens for clarity. It empowers citizens and informs leaders, helping build a modern, accountable state for 240+ million people. Every rupee is precious in Pakistan. Segment reporting gives us the clarity to spend each one better. That is a big deal.